Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors, and welcome to this Friday edition of Benzinga's Pre-Market Prep, brought to you by Thinkorswim and TD Ameritrade. I'm Spencer Israel. As always, here with Joel Elconin and Dennis Dick. Again, we've got earnings coming out of our noses this morning, AMD, and from yesterday afternoon as well, so we're going to get to as many of those as we possibly can. We'll also, of course, talk about the Reynolds M&A news and the Whole Foods hepatitis news in Detroit, seeing as how we're in Detroit. We were able to get some info on that story yesterday. We're going to have two guests on today. Our first guest will be at 8:20. He is Jonathan Corpina, Senior Managing Partner at Meridian Equity Partners, calling us from the floor of the NYSE. And then at 8:40, we're going to have Peter Ghosting on. He's a trader and founder of a teaching website called 61.8. I do want to mention also that we're on YouTube Live right now, as well as our regular website. So I'm throwing the link to the YouTube Live in the chat. You can also just go to Google BenzingaTV live stream, and that should get you to the YouTube Live page as well. Joel, before I throw it to you, do you know what yesterday was?
No, I don't.
No. Yeah, I actually forgot to mention this yesterday. Yesterday was my 1-year anniversary of being on the show.
Really?
Yeah.
And we didn't throw a big party?
No,
or anything?
I forgot to mention it.
All right.
Yeah, a party was thrown without me. I wasn't there. But anyway, how are we doing the S&Ps this morning?
Not very well, Spencer. We're down 7 points. We had the close right there at 30.70, even couldn't hold that. 38.50 the high. Looking on the downside, folks, double bottom, 26.5, 26.75. Wednesdays and Thursdays lows. That is the key to today's session. Can we hold above there, rally back into the 21.40 handle? Crude giving it back a little bit. Had the rally earlier in the week. Now just coming back to that $50 magnet number. Trading down 12 cents here. And then you have gold and silver. They had a little bit of a break yesterday. Tried to recover, but for the most part, gold and silver are still in a consolidation mode. Dennis, earnings Friday. How you doing?
Earnings Friday and options expiration Friday, Joel. We got a sneaky options expiration. This is the latest date it could possibly be. It's always between the 15th and the 21st, the third Friday of the month. And this is as late as it can be, October 21st, options expiration.
All right. Well, it should be fun here. We got a lot of consolidation in the market. We'll see if there's some consolidation in stocks also.
And just to tell you, for newer listeners, their options expiration, the reason you see a lot more volatility on the open and close is because you have institutions that are jockeying the stocks against their open option positions. And a lot of times that equals maybe a stock opening a little bit too high or a little bit too low, or closing a little bit too high or too low. So sometimes you can get some erratic opens, and that can be a great opportunity for the opportunistic retail trader that's looking, and trading a fair value strategy there. So stuff we will talk about at our workshop in November in Detroit. So if you can, come on out and see us there. We'll dive into some of the details here on some of these strategies that I've used for 17 years.
All right, 8:04 here. I guess the big report, the one we want to start after the close here, Mr. Softy up 345.
Yeah, wrong on this one. Egg on my face, because I was bearish going into this report. Saw the IBM report, saw the Intel report, and start to think, well, maybe Microsoft will follow suit. Not the case. Microsoft not only breaking out here on this report, which we'll get from Spencer in just a second, but this is now, after 17 years, a new all-time high for Microsoft. It took 17 years, Joel, since the tech bubble, but Microsoft finally, if you held on all that time, you got your money back.
Spencer, you got the details on that report?
I do have your numbers for you. Q1 EPS 76 cents versus 68 cent estimate. Sales of 22.33 billion versus 21.7 billion. Yeah, so like you guys said, a good report.
Up 6% here in the pre-market. Well, I know resistance is going to be hard to find, Joel, when you're at these technical levels, but just to refresh our memory, What was the old all-time high set back, I believe, in 1999 or 2000 in Microsoft?
59.97 here. I have it up
Never
here.
got through 60. Those big hole numbers worked back then too.
They sure did. And as you can see here, it's been a long climb here. Microsoft up $3.44. I guess you could have went lotto on a lot of different calls on that one if so inclined. But trading here just near the highs of the pre-market session here too. Let's look at our pre-market high of 60.79 here. Maybe 61. Based on the 15-minute chart here, it looks like you have support at 60.20, but I'm sure we'll trade lower than that and probably trade above the pre-market high as well.
We had a couple people just in the chat this morning complaining that it wasn't working. We had to refresh the server, so if the chat's not working for you, just give your screen a simple refresh, and that should fix the problem.
Yeah, and I want to add to that. I am currently in the middle of a conversation via IM with our head of IT right now. He's working to solve the problem literally as we speak. So just
okay.
we are
chat,
aware of that.
If it's not working, try to refresh there. That's what worked for me. So obviously a few issues there just with the chat here this morning. The gremlins aren't too bad though. Show's running fine. So let's talk General Electric numbers. GE this morning did report earnings here. Spencer, let's get the details.
Q4 adjusted EPS 32 cents. That was in line. Sales of 29.27 billion versus 29.6 billion. So a slight miss there. They do see their fiscal year operating EPS of $1.48 to $1.52. That's in line as well. They also added to their $4 billion buyback plan.
Stock is trading just slightly down here in the pre-market. Last night, Joel, they were bidding this up. Ahead of the report, it was actively trading around 29.30, which would put it up about 1% after hours. Those people obviously on the wrong side of the trade here because the stock is drifting down a little bit in the pre-market, but not down too much, only down 0.5% here. Give some technical numbers.
All right, pre-market low several times here. You've hit 28.60. That stands 61. That stands as your pre-market low. Bouncing up to 29 here a couple times. Little bit of hot water in this one. Not really. I bought a few of the 29 weeklies, just a very small lot here. But what I think I may do, because I did buy such a small lot, is maybe I'll nibble again on the open. You know, don't frown, average down, and see if we can get a little pop here. But I'm glad I just went a little bit to the. Little bit on the call side. What I was looking at here is when, but before the last earnings report, man, this thing was just bunching up at 33 here. Everyone leaning towards a breakout here of 33. You saw what happened. Kind of like the technical formation here on the downside, but we'll see. I mean, we have bounced off the pre-market low. They'll probably grind it above and below 29 a lot. That's probably the pin, but who knows? Buyers may emerge in this one.
And that's a great point you're making. You know, on these Fridays, we talk on the third Friday of the month, you often do have pin action there. And that's just basically where the high open interest is on a particular strike contract there. You will often see, especially if the stock is trading close to there, let's say at 330 or 345, you'll get some natural action as people are selling the stock. If they got the 29 calls, they'll sell the stock against it if it's trading 29.10, and that puts downward pressure on the stock. If they got the 29 puts and the stock's trading 28.90, they buy the stock against it, and that could put upward pressure on the stock. So the natural action there is on that pin 29. So you want to look at the open interest, you know, use whatever service you have to find that and gauge that. And if it's relatively high to what it usually is, trading at 345 or 350 with 15, 20 minutes to go, those numbers can often act like magnets.
All right, we'll see what happens here. Pre-market low, 28.61.
Mickey D's. Which everybody had in the doghouse for it seems like forever, but it had been down 4 days in a row going to the report. So I was already feeling like I wanted to buy this thing heading into the report because I feel like everybody sold it ahead of the numbers. I didn't. I held off. I did not buy it. It's too bad because the stock is trading up almost 4 points here in the pre-market. Numbers came out right as we were starting the show. Spencer, give us those Mickey D numbers.
They beat by a penny, $1.50 versus $1.49. Sales of 6.42 versus 6.28 billion. So they beat on the top and they beat on the bottom.
I think adjusted number I saw $1.62
I'm sorry, yeah, adjusted was $1.62, yeah.
Yeah, so which would be a 13-cent beat on an adjusted basis there. So it's a nice beat for McDonald's, especially in a stock that everybody had in the doghouse. I mean, this thing got down almost 110 to 10. And that's why, as an investor, I like contrarian investing. I'm not a contrarian trader because these pesky little trends can stay for a long period of time. But when I get longer term, I do like contrarian investing, and it has worked for me. That's where, I've picked up a lot of stocks when they're hated. And I don't know if McDonald's is at that point yet where I can jump in. It's a nice dividend, 3.3%. Valuation still a little bit high for me here. I'd love it in the lower 100s. I don't know if it's got the gas to get there longer term. But 114 is a nice pop here, especially if you were playing it just from the long side ahead of the report.
Oh boy, oh boy. We have popped over 115 here on two of the bars here over the last hour. 115.30. That's your pre-market high. Couple highs over 115 back in the last few sessions. So I don't know. I mean, I would say, just fade this thing. But Dennis, you could have taken me to the cleaners yesterday on AXP, as I didn't think it would close over 65 here. So I don't know if Mickey D's has the capacity to do that. I'm sorry. The pre-market high is 15.35. I see the 4-day high at 15 and 11, and then things open up to the upper 115 handle at 15.74. But keep an eye on that pre-market high, 15.35. See if you can get some follow through that. Real quickly before we move on to our next stock, Fiat K, is the pin the same as the max pain number, Dennis?
Yeah, it's similar terminology. max pain is just where you can expire the most contracts worthless. Like we're pointing out a specific contract here. So it's all the same, action there where, options tend to expire worthless there. So, if you can, if the price moves through a certain point, that's where the most options are going to expire. So it's a little bit different, but where we're talking about a specific strike point, usually max pain, and depending, I mean, everybody uses their own terminology. I've always thought max pain as where the most contracts expire worthless. So similar style there, and something to consider. But when I'm talking the pin, I'm talking the specific contract and looking at those option strikes that have the most open interest. So looking at a specific contract that's trading close.
Wait, can I ask a quick question? Because I don't know the answer. When do you guys put more into GAAP EPS versus adjusted EPS? Because I never know which to care about more.
Adjusted. Oh, I always look
You
at
you always
adjusted.
do adjusted,
Always. Yep.
even during like a market downturn when
Yeah, yeah, yeah. I'm always looking at the adjusted number because when you start talking, just one-offs, you want to know what the consistency of the quarter is. So I don't want to talk about a one-time event or a one-time gain that's throwing off the numbers there. So I'm looking always at the adjusted number, and I think the market tends to focus on the adjusted numbers as well.
Okay, that answers my question. Thank you.
See, we even talk fundamentals here on the show. It's not all technicals here, even though most of our trading is technical. McDonald's trading up here though, 114.56. A couple other stocks here that reported here just this morning. We had Honeywell report. Spencer, give us the details. One thing about the Honeywell report is I believe they already warned about this quarter. So it's not surprising, the stock is actually lifting. If you're looking at it, Honeywell, it looked like they kind of missed here this morning. Well, they'd already told us about that. That was the big gap down there 10 days ago. So, Spencer, give us the numbers.
They actually beat they warned a buck 60 on the EPS. They come in with a buck 67. With that, sales 9.8 billion versus 9.79 billion. So they actually beat their revised guidance from a few days ago.
Yeah, they were $1.70 originally, and then they revised down to $1.60. I guess they found 7 cents since then because they got up to a buck 67. But stock is lifting up here. I mean, 110 is just a huge number for this. That's where it got to just looking 4 days ago at 110.07. It's a big whole number. It's a big psychological number. It is option expiration day. That's the level that I'm looking at. 110 looks big to me, Joel.
Yeah, very spotty trades. No one really stepping out with any size here. Couple hundred.
320 shares only. You want to talk about spotty trade? There's no trades.
Yeah, no trades. 110. You can see that level sticking out like a sore thumb here. Double top though, just to get in play here. 108.66 and 108.58. Those are your highs from your last two sessions. We are above that on very light volume, but 108.60. That's a level I'm keeping an eye on here. See if it acts as support or resistance here in Honeywell.
Let's talk PayPal from last night, and I was watching the action in this, and there has been some reversals just happening because on the initial numbers with PayPal, They smacked this stock all the way down to 38 bucks, and then they came with their buying shoes on. They got up to 39. They got up to 40, 41, 42, 15 here now this morning. So it's been a quiet 10% pop since the after hours low the last night in PYPL. It's trading up 5% from yesterday's close. Spencer, what are the details here on the PayPal report?
PayPal Q3 adjusted EPS 35 cents. That's in line. Revenue of 2.66 billion versus 2.65 billion was the estimate there. Also got some guidance Q4 non-GAAP EPS 40 to 42 cents. That's in line with the estimate. Sales also in line with the estimate of 2.92 to 2.99 billion dollars. Their fiscal year adjusted EPS is also in line, and their sales for the fiscal year is also in line. Everything's in line.
Everything's in line except for the share price. That's up 5% here. Joel, technical levels.
One number and one number only.
Well, I like it when you give me one number. That's what I like.
42.55. That's your old.
Why?
That's an all-time high that was made.
Really?
That was made in the first month of trading. Hasn't seen that level since. That's the number 42.55.
Ah, impressive. Okay, so moving away from the earnings parade here, we got 3 minutes before Jonathan Corpina comes on from the floor. We've got a merger, well, a bid anyways. We've got British American Tobacco, which has trades an ADR over here as BTI, is making a bid for Reynolds American, the shares that they don't own. I think they own a big chunk of it already. They're trying to buy the rest of the shares that they don't own. It's a $93 billion deal. The numbers that they're proposing is 24.13 in cash and also 0.5502 shares of BAT. And that has RAI as your big leader of the day. The only stock that's ahead of it this morning, which we didn't talk about either, was ALKS. ALKS is trading up 37% in the pre-market. RAI, normally a 1 or 2% mover, is trading up 22% here in the pre-market right now at 57.75. So tobacco is hot again here, Joel.
Oh,
Smoke it. Smoke it.
I hope this is not one of. What was that other merger that took?
Lorillard.
Oh my God!
And that went on. The saga went on for so long on Allo. But you know what? I'm happy the saga went on with Allo because it was one, and I believe was it Reynolds American buying Lorillard? It wasn't it Reynolds American that bought Lorillard? I'm going with the,
I
obviously there's
think
only two or
so.
three. Or did it end up being British American again?
I can't remember.
I can't remember either.
Put that
Anyways,
one on.
Lorillard, anyways, had the original rumors back in the day. The symbol was LO.
Dennis, you there?
Being able to buy it at the price where it was before the rumors started. I love that when I get that. And it ended up getting taken out, and I ended up making, I think, 10 or 12 points on it.
This was July 2014. They bought Little Lord at for
You bought
27 Reynolds for
It was.
$27.4 billion. It was
Yeah.
yep.
So
So
no, BAT, which is British American Tobacco, which is BTI. Wish they had the symbol BAT over here, which is annoying to me. But anyways, they're trying to buy them all. So Reynolds American here could potentially, well, it looks like it is in play.
Yeah, hitting the BTI, rallying the RAI. I mean, for me.
Are they hitting the BTI? Where's it at?
BTI here. Boom, boom. 120.88. So let me. Oh, actually, it gapped up. I was just looking from the high. Let me take a look at the BTI
Yeah, I think
here.
it's trading up here too,
Yeah,
which is interesting.
it is. It's trading up $3 after having just a horrible few days here.
I don't know what the BTI. I don't like, when the acquirers start gapping up, I often think that's a fade. So I'm not a fan of that at all. I'd maybe be fading that one. But Reynolds American, when it's in play, and somebody else, I just saw a comment go by on my stream that maybe they might get a higher price. So there might be some speculation here that this might not be over yet.
All right, it is now 8:19, and we are going to take our first break of the day, and we're going to make a call to the floor. Jonathan Corpina, Senior Managing Partner at Meridian Equity Partners. We'll be right back with Jonathan.
Murdy and Jonathan.
Hey, Jonathan.
Hey, I can't.
Hey, Dennis, how's it going? Yeah, we're here.
There
Yeah,
you
we're having
are. Hey, Dennis.
a few technical difficulties here this morning, but we're here. Joel, you still?
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Spencer Israel, Dennis Dick, and we have Jonathan Corpina on the line.
I want to take a quick break on there's a feedback loop, and I want to take a quick break. So let's take a quick commercial break. Sorry about that, and I'll get this figured out.
Once again, Jonathan Corpina online, Senior Managing Partner, Meridian Equity Partners. Jonathan, how you doing on this Friday?
Gentlemen, good morning. Happy to be with you.
All right, trading range here during earnings season. S&Ps have been in a pretty tight 20-point range this week. Some good earnings, some bad earnings. What are you looking for to get the market out of this malaise?
You know, you say we've been stuck in this range, and that's so true. From the beginning of the summer, it seemed like the market had this range of 2150 to 2180, and any real news that was out there, negative or positive, kind of bounced the market around in that little area there, but didn't really move it outside of it that much. So I'm somewhat happy to see now that the market has drifted outside of that range, whether it was above it or below it. It's good to see now that we're getting a little bit of volatility back into this market here as we're trading below that 2150. That was a support level that's now become a resistance level. As we've gotten into the fourth quarter here, we have our normal economic calendar. We've got earnings season. We've got presidential elections. We've got debates. We've got interest rate talks. So there's so many different factors that are out there right now that really could be moving the market, but just really hasn't moved the market that much. It seems participation has been very, very light in the last few weeks, and it's kind of surprising. As we got out of the end of the summer, you would think that participation levels would have picked up as we're getting towards the end of the year and as we're getting into the fourth quarter. But last week we had I think it was the fourth and fifth lowest volume days of the year. This week we had a very low volume day of the year. So the participation level has been down significantly, and I think that's something that's been somewhat concerning to me as we're approaching these pretty significant events on our calendar.
Jonathan, let's talk short term here. It's options expiration here today, and I know these days can equal a little bit higher volatility on the open, on the closes. Maybe you've got some institutions jockeying their options positions against the stocks there. How do you approach these days differently? Because a lot of times I know you will see a lot more volatility, sometimes even on the opening or the close. What do you do as a floor trader there on these types of options expiration days?
I think days like today are actually really good days for larger portfolio managers who have significant positions that might want to add or subtract from those positions. The volume's there to support any real significant movement into or out of a stock. So if a portfolio manager wants to lighten up their load on a particular stock or a particular sector, the volume that's there on an option expiration day is going to really help and offset a lot of volatility, and it's going to add more liquidity into the markets on days like today. So I think portfolio managers use days like today as opportunities to move a couple things around. You've got a couple of the index traders that are out there that use this significant volume to really help. But unfortunately, these are kind of one-off events that happen throughout the month. We'll go back to a lower volume day on Monday. But approaching a day like today, I think you're going to find liquidity. So you have to use that opportunity when it comes up.
Speaking of one-off events, we have something here coming up, a presidential election here, and boy, oh boy, you've had some sectors really getting hit off of the potential of Hillary winning with the biotech sector. I'm not sure what people want to own anything if Trump gets elected here. Just give us a talk on possible sectors that will be in and out of favor depending who occupies the White House.
Right. So assuming that this can go either way at this point in this conversation right now, I think, like you said on the lead-in, biotech is clearly something that's going to be in the spotlight if Miss Clinton comes into play there. And I think we're going to look at financials will also come into play in both areas. They both had their comments about how Wall Street should be regulated and how things should move, how the landscape should look moving forward. And I also think if you're looking in the energy sector too, they've both been very, very clear as to energy dependency, oil dependency, trade with the Middle East as far as oil is concerned. So I think there's a few sectors that we can really draw lines to either individual or both candidates that are out there. And I think that has led to the step back in participation in our markets. I think investors are really trying to wait and see, who is going to be our next president and how that's going to affect overall sectors.
So we're starting to come into the heart of earnings season here now. We heard from a lot of different companies. Last night we heard from Microsoft or AMD. This morning we heard from McDonald's, General Electric, Honeywell here. We've heard from most of the banks so far here. What have you thought of the earnings so far, and what do you see going forward in this earnings season?
It's been a lot of managing expectations, I think. We haven't had any real blow out of the water surprises. We haven't had any real big, massive blow-ups. So it's been all about managing expectations moving forward. The landscape of this fourth quarter, as we're talking about presidents and as we're talking about interest rates, we continually talk about the effect of currencies on some of these companies and the effect of energy prices on these companies and how they live in this $50 a barrel in oil environment. So it's been really about managing expectations moving forward, and then you throw interest rates on top of that. So I think they've done a pretty good job of tempering any fear or any massive uncertainty as what the next few quarters are going to be like. But I think when we strip everything down and take a step back, we know that the Fed is going to raise interest rates, whether that's in December or in the first quarter of 2017. We know we are going to have a new president sitting in office that is going to have a different take as to what we've seen over the last 8 years. We know that there could be a shift in our Senate and the way the government operates and looks at certain things. So those things that are certain, I think. Are giving companies the opportunity to try to manage some sort of the expectations of the uncertainty that's out there.
Jonathan, I just wanted to get your real quick here on the crude oil market. Energy stocks, big part of the S&P 500. Rallied earlier in the week here. You did mention the implications with who comes in the White House. Just any quick thoughts on the crude oil market and energy-related stocks?
I think from oil side, I think people were a little bit more comfortable with oil trading in the $40 to $50 range. As we've trended above 50 here, and as we continue to have conversations as to OPEC's interaction and outputs in the Middle East and Saudi Arabia, I think we'll feel a little better if we pull back from this range a little bit. The high 40s, 45 to 48, I think would be a comfortable level. As we tend to trade higher, I think investors seem to have a little bit of fear of, are we going to have a larger upswing again, right? So, I mean, take a few steps back to years ago when oil was trading at 130. We went down to the 20s, and now we're kind of trickling back up again. Keeping it within a range, I think, would be comfortable and somewhat prudent for our overall economy. If we start to continue to drift higher and higher and higher, I think investors might feel that there might be that upswing again, and that would not be helpful for our markets and for sentiment.
We've been on the line with Jonathan Corpina, Senior Managing Partner, Meridian Equity Partners. Jonathan, enjoy your day on the floor there. Have a nice weekend. We'll speak to you again soon.
Gentlemen, thank you very much.
Thanks, Jonathan.
All right. Sometimes down on the floor there, you got a lot of different connections, a lot of things going on. Sorry for a little bit of that interference here. Dennis, 1 minute past 8:30, 8:31. I know it's option expiration day, but how are these imbalances looking?
They're all buy imbalances here right now, and that's not that surprising. Like on this day, there's so much institutional action, just like Jonathan was saying, the volumes are so much higher. That just because you see a few buys at the open, one, big, wave of selling could come in and change them all to sell. So I still think, it's very early here. It's 8:31. I'll say most days when I look at these numbers at 8:31, they actually mean something. On options expiration, they're almost meaningless. They don't start meaning something until you really get to like 9:27, 9:28, when all of the other institutional order flow starts to come in. So there's only a couple players basically showing their hand this early, with dozens or, potentially hundreds of different players, major players, to come into the market yet. So it's so early, it's hard to put relevance. Right now they're buy imbalances, but again, SP futures are trading down. I'd expect a lot of them to move to sell imbalances.
All right, did we get to cover all of our earnings stocks?
No, we didn't. Skechers is one I wanted to talk about here, and the Reverend must be pretty happy. Do you think he's still short this thing? Because he's been all over this stock. He was telling us the shoes hurt the feet back when the stock was $45 a share. It's now $19.50. It's down another 15% here. SKX just cannot catch a bid. We've both, we've kind of all been bearish the stock a little bit, but nobody more so than the Reverend. And obviously he's made some great calls on our show being bearish the stock. And now it's 19.5 here, Joel. Spencer, just give us a quick details on why they're taking SKX behind the woodshed and beating it to a pulp.
Well, that was very mean, Dennis. 42 cents versus 42 cents versus 47-cent estimate. Revenues of 942 versus 954 $million. Their fiscal year revenue coming in at 710 to 735 million. The estimate was 799, so a big miss there on the fiscal year rev guidance.
All right, here we are looking at a new low of the move, the former low of the move that was made back on September 21st. 2090, we're a full stick below that, so that's stick and a half actually. So 21, if you do get a rally, if you're trying to pick a bottom here, maybe people will be looking to get out of that old low. Just kind of stabilizing here. We did have a print at 19.28. That's the stock has not been under $20 since February of 2015 when you had a low at 19.51. So this kind of down open, more of a buyer here, especially if I was short and selling this thing in the hole.
I want to. I'm just not a fan of the stock at all. So I'm not even looking to pick a bottom on this thing. I just, it's just been weak, and obviously gap down. You get little rallies here and there, but long term here, I think this company just has problems.
I want to discuss this Whole Foods story from yesterday. So there's a Whole Foods. There's one Whole Foods in Michigan, and a report came out that 2 people reportedly got sick from hepatitis from this Whole Foods that's actually like a mile up the road from us at Benzinga. So Brent reached out to them yesterday. Brent got some comments, and Brent, can you share your insights with us?
Hey, good morning, everybody. Yeah, sure, no problem. So, heard a report from the Detroit Public Health Department that the Public Health Department was investigating these claims at the Detroit location, kind of, as Spencer was saying, kind of being just down the road. We sort of took not a likening, but we wanted to investigate this one a little bit. Called Whole Foods right after the stock started falling and said, "Hey, just give me a heads up that this is out there." One of the corporate communication heads that I talked to said that she was not aware of it, and pretty soon there was a statement that came out from Whole Foods. The statement said, one of our team members from Whole Foods was diagnosed with hepatitis A. Out of abundance of caution, we immediately contacted the Detroit Health Department and began reviewing food logs and safety procedures. While there's no definitive link that the second case is related to the occurrence at our store, we are cooperating fully with the Detroit Health Department to ensure the safety of our customers and team members. Stock is trading down, I don't know, 40 cents or so since that alert came out, about 240 or so yesterday.
It's 28's been the number for this thing, and I don't know, if there's going to be anything more with the saga with hepatitis A. I mean, that's scary. I've shopped at that store before. It's always a really busy store too, so I think it's one of their better stores. But just talking just pure technical, obviously, if I get another case or something coming out of there, stock's probably going to get a hit. But just looking at it just from a pure technical basis, this 28 has been major support for a long time. You got to go to the weeklies, and this level is one of the biggest levels that you'll see. Go back in January and February, we're down there multiple times. We got down there again in May, and now for the last 2-3 weeks, we've been testing the same level. So start breaking down through like 27, and you're in trouble in the stock.
Right, really been in a trading range here, basis the weekly chart. Going back about a year and a half, we are at the lower end of the trading range so far. No substantial news out of that. We'll have to, excuse me, stay
Joel,
tuned.
you okay? You didn't
Yeah.
eat a Whole Foods, did you?
Joel, didn't you? Oh, you took my joke, Dennis. Gosh.
I beat you too. You gotta be quick, Spencer. You gotta be quick.
Well, we'll just keep an eye. Got a good point there at the $28.
When Brent and I were talking about this earlier, actually, and Brent said he had to go food shopping yesterday, and specifically did not go to Whole Foods. I've been meaning to go to Whole Foods now for a few weeks now, and now I'm not going to go there. So it's just two people. Brent, you want to add to that?
Whole Foods is about a 3 or 4 minute bike ride from my home, and I chose to drive 15 or 20 minutes to Meyer because I was thinking about the story from the day. Probably just a psychological thing, but I mean, there you go. I guess there's a bit of a demonstration.
Brent, how many groceries can you buy if you ride your bike to the store?
I put them on my arms, Joel, so I'm like riding no hands, and I just ride down
No
the road
hands.
like that. Yeah, and I just carry.
You're a bike rider.
Yeah, I got strong arms too.
Carrying that milk, that's got to be tough.
Thank you, Brent, for that color.
No problem.
All right.
One more minute here before we get our second guest, but just want to jump in. There hasn't been a ton of ratings changes here today. One of note, Yahoo catching another downgrade here. This one, Jefferies downgrading the stock. I think everybody's worried about this Verizon deal here. So, but like I said, even if you're worrying about that Verizon deal, Yahoo is still basically an Alibaba tracking stock because the majority, 90% of Yahoo's value is linked to Alibaba. So you have that extra little $4 billion that obviously Verizon's making a bid for here that is potentially in jeopardy. But still, I don't see if a deal falls apart with Yahoo and Verizon, I don't see Yahoo just all of a sudden collapsing in price because so much of it is still linked to Alibaba.
All right, it is now 8:39. We are going to take our second break, and if you enjoyed Nick Shaheen as a guest, the author Create Income with Option Spread, you're really going to enjoy the next guest as well. His name's Peter Gostein, and he's a trader and founder of 61.8, and very, very similar trading style to Mr. Shaheen. So we'll take a quick break, and we'll bring Peter on along with his charts. We'll be right back.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by Benzinga Pro. I'm your co-host Joel Alcon, along with Dennis Dick and Spencer Israel, working the boards, and we have Peter Gostein on the line, and he is a trader, and he is the founder of 61.8. How you doing today?
Very well, Joel. Thanks. Thanks for having me.
I mentioned that you were a similar trader to Nick Shaheen, who we have on the show on Tuesdays, but you incorporate a little different kind of technical analysis. Tell us about your methods of technical analysis.
So, when it comes to technical analysis, common sense and instinct are the primary two indicators that you have to rely on. A lot of people throw in a lot of indicators on their screen, and these indicators are mostly based on price and volume. They can't tell you much more than price and volume themselves. So my approach, when I started trading, I had a penchant for forecasting more so than trading. I loved forecasting a lot, but of course I like trading. And when I started off, I delved into Elliott wave. I started with Elliott wave, which is something that you should, reserve until later. You should, learn the basics. And sure, it was nice and elegant. Everything looks great in books versus practice, which is totally different. And then I quickly found out that there's a lot more to trading than just, tracking waves and every wiggle and price and all that. I quickly adopted the market profile approach, the auction marketplace model. And then chart patterns, classic chart patterns, that's something that is very essential, an essential tool in my arsenal. And now I approach trading in technical analysis for me is a layered approach. I use various different things, and I try to come to a consensus. So a little bit of Elliott wave, chart patterns. I keep track of the trend, which is very important. You always have to trade with the trend. And support and resistance are absolutely important, and those levels. A lot of people rely on Fibonacci, price, and time for support and resistance. Support and resistance are essentially the prior highs and lows on the chart. That's where buying and selling decisions have occurred in the past. And then if you rely on the auction marketplace model, if you truly believe the market is an auction and the auctions week in, day out, and week in and week out, then there's a mean that price always reverts to, it seems. And then when it trends, it moves from one prior consolidation to a prior consolidator to another one. In other words, it moves between various different auctions that it had developed over time. And then when it trends, it might move to new highs and then consolidate and then either revisit a prior consolidation or move on to building another one. So those are the support and resistance levels that are very important to me. I had a eureka moment not too long ago, a couple of years ago, when I really delved deep into the Black-Scholes model. And I quickly discovered that what really sets the tempo for the market are weekly options. Weekly options are very important because the pricing model, the Black-Scholes pricing model, assumes that prices are normally distributed at expiration. By that, I mean a Gaussian distribution. And then at the same time, the auction marketplace model also relies on a Gaussian model. You have a bell-shaped curve that forms almost on a daily basis or weekly basis if you believe the markets are fractal. So what I try and do is I try to reconcile the two. The bell curve or the auction that forms during the course of a week, and the normally distributed assumption that or the normal distribution assumed by the Black-Scholes model.
Peter,
So
let's
what I
get
do
in.
is I
I'm sorry, we're up against the clock here a little bit. You gave us four really nice looking charts here, and I just want to bring up. I got the SOX chart here, and this is showing the tops and the bottoms over the last 5 years. You have
right.
some congestion here. Explain to you what you have on this chart.
So I'm not looking at the chart. If you're looking at the SOX model, you notice that there's a triangle that formed during 2002 to 2007. During that period, to higher high. And then you had the financial crisis, the crash, which the SOX confirmed and set a new low on the heels of that triangle. And then the market embarked on a new bull run after the 2009 low and kept running up until it ran into the underside of the triangle, if you notice. That was in early 2011. During that year, having run into that line, the SOX began to pull back while the rest of the indices kept forging ahead, making new highs until finally the string snapped and we had the crash of 2011. And then after that, it kept climbing again. We had a beautiful run. We actually surpassed that line in 2013, 2014, making new highs. So the rally during that period was confirmed by the SOX because it kept running. And in fact, the SOX was outperforming the S&P during that time. And then when we crashed in summer 2015, what happened? The SOX came down and tested that very line that it ran into in 2011. That marked the bottom in 2015. And then we had a retest of that in early 2016 yet again. And then again, you can see that it came down and tested the top of that triangle or the top of that line that I drew on the chart. So all I had to do is follow the SOX to time every bottom in the market, including the October 2014 low, which tested the top of that triangle that formed during those years, 2002, 2007. So I didn't have to use a MACD, a stochastic, or any sort of indicator to tell me where the market was going to bind.
Peter, I just want
to
jump
in. And then the same thing.
Oh, sorry. Continue. Continue your point.
No, go ahead.
I was just going to say, I was going to take you back actually to when you were talking about the weekly options as well. You were just talking about it just before this. We started talking about the SOX.
Right.
And
my style.
Yep.
My trading style, which, by the way, I went on a tangent and got into a lot of detail.
That's okay, though. We like tangents. Tangents where we get the meat and potatoes.
I went through everything that everyone's gone through, and I've lost tremendous amounts of money in the market. But first on the hands of money manager, and then after I took matters in my own hand, I did even worse. And if you've ever seen a movie where a victim says, "Why me?" That was me, actually. It just I couldn't believe it because I've done a lot of great things in my life, built 2 companies and all that, and I couldn't figure out how to trade, even though I had great forecasting skills. And then every trader will have to eventually find a rhythm and the style of trading that suits his or her persona. And after a long search, I basically realized who I am as a trader and what style fits me the most. And that is setting credit spreads. Because as you know, options, 80% of them expire worthless. So if you are on the buying side of options, you're likely to lose. And that was me for a long time until I figured out what technical analysis framework I want to adopt and live within. And then I immediately, naturally became an options trader. So now my method, which I call on any given Friday, calls for studying the market Monday through Thursday, and then pull the trigger on Friday, sometime even Thursday. In other words, I want to know everything that the market is doing and what it's likely to do on Friday. And by that, I mean, what level is it going to be below, or is it going to expire below on Friday, or above? What support and resistance level it's going to adhere to. And so I sell put options below support. I sell call options above resistance, and I watch these credit spreads expire by the end of the day. And most of the time, I close them by 2:30 or 3 o'clock to not fall victim to gamma risk and things like that. So that is my approach, a deer hunter approach. You can almost call it. Because, the market is like a casino. It flashes these lights at you with beautiful colored charts. And you can't help but to throw chips at the table and gamble at something that's not me anymore.
So tell us about, jump into a little bit more specifics there. So when you're looking at the weeklies, are you looking at like the open interest? Are you looking for like, max pain? Like what are you looking at when you're gauging, on the weeklies to, make your trading decisions?
So what I'm looking for a developing pattern, a chart pattern. It could be a head and shoulders, an Elliott wave structure. For example, I might have sent you that article. Actually, it's on my website. It's about Baidu. Baidu, 2 or 3 weeks ago, was almost near 200. We spotted a triangle on the chart, and if I were to follow the Elliott wave rules, it says a triangle in the fourth wave position precedes the last movement in the direction of the trend. So we timed that. We followed the rally that developed on the heels of that triangle, and then we knew that the market is going to reverse course on the heels of that fifth wave. What did we do? We sold call spreads above the fifth wave. Okay, that was one example. And then we came back to Baidu after it reversed, and we spotted a pattern following strict technical analysis rules that told us it's going to bounce back to 187. We played that as well using directional call options. We bought call options, and then we sold call options above the target of that pattern that we spotted. So we cashed in on the calls that we bought, and then we cashed in on the call spread that we sold above the technical target or objective of that pattern that we spotted. So basically, I'm looking for patterns. I'm measuring the technical objective of that pattern, and I'm not only doing that, I'm also trying to reconcile that technical objective with a volume area on the market profile chart, because I was told something very valuable a long time ago, is that the market moves from one value area to another. 80% of the time, the market is not trending. It's consolidating. It's in balance. And then it moves to another place below or above that consolidation. It forms another consolidation or tests a prior consolidation. So for me, I'm always looking for patterns forming on the chart where price's objective is to either move up or down to test a prior level where buyers and sellers were in agreement on price. And I look a lot at options open interest, because open interest tells you where the big money is putting their chips. In other words, And of course, when you see a boatload of calls or puts at a certain level, a lot of people say, hey, these levels act like magnets. Well, they act like magnets because they coincide with important levels on the chart. And they're either betting on these levels not being exceeded. Most of the time, that's what they're betting on, the levels not being exceeded. So when you see so much open interest, it's because it's credit, it's premium being sold by the smart money. So I try to come to a consensus, try to decipher what's happening on the normal charts, the conventional candlestick chart. I'm looking for patterns. On the market profile charts, I'm looking for the important support and resistance levels formed or developed as value areas. And I'm trying to come to a consensus. I'm trying to decipher the message of the market on a week in, week out basis. That is my time frame.
Peter, we got to wrap things up here. I'm sorry, Peter.
Okay.
We got to wrap things up here up against the clock. Great information. We hope to have you on again soon. A lot of great points here, and I'm sure you can go in more detail. Thanks a lot, Peter.
Thank you.
All right.
Thanks, Peter.
All right, S&P futures now near the lows of the session, Dennis. Wednesdays and Thursdays lows, 6.5, 675, right there, right now. So we'll see what happens. Still 34 minutes before the open.
I want to add real quick. We've been having some intermittent issues today with our chat, etc. But CNBC just tweeted out a few minutes ago, and I was hearing this earlier actually. Amazon and Dine DNS are kind of investigating widespread internet outages throughout the entire part of the country.
Who's investigating it?
It's Amazon. It's like Amazon Web Services, which is like the cloud server that we use and many other people use. Amazon Web Services and Dine DNS. They're like an internet infrastructure company. So there's apparently like CNN was down earlier this morning. There's like widespread internet outages.
So it may not be our fault.
Yeah, I'm just throwing that out there. There's like
what a powerful impact we have on the internet.
Yeah,
That's it. We started this when everybody's trying to access our chat here all morning here. I think we're starting the outage, putting too much information through the streams.
All right.
Hey, I just want to jump back. So imbalances here have all turned to sell imbalances, which we said that probably would happen. When I looked at them at buys at 8:30, you had to look at it with skepticism. They're all sell imbalances now. It's probably why we're leaking a little bit here now. Just jumping back in, to what Peter was saying there, because he got really, quantitative, and he got, a little bit. It started, as a retail trader, I just want to sum up a little bit of what he was saying because it was very important. He gave some very good points here, stuff that we've talked about before too. It's so important to look at the weekly options, because the weeklies can dictate, especially if they have open interest that's very high at specific contracts. It can be levels, which was Peter was saying, that won't be exceeded, and those levels might as magnets. We were talking about the pins earlier, but sometimes it's just if there's a contract, let's just use Apple for example, which has a lot of huge weekly options. A lot of times you'll see on the Friday weekly, with the weeklies kind of dictating the price, and the stock will have a struggle, let's say getting through like 117.5 or 120 because there's so much open interest there, and then those options expire and go off the board on Friday, and the stock kind of releases on Monday. So that's why a lot of times you see on the bigger caps that have weekly options on them, after the expiration, the stock can actually move on Friday. Why is that? Because everybody who has those options, those calls and those puts, no longer are trading the stock against it. So it actually reduces the liquidity in the stock to a certain point, and then real money can come in and actually move the price. So basically, what those options do, especially when you get close to a strike with a lot of open interest, is that it adds so much volume in there because it adds so much potential liquidity that the stock can thicken up, and it thickens up, and after those options go off the board, then it can get released. So basically, long story short, is that when you're close to, a major strike point, especially on an option expiration day, third Friday of the month, if if there's high open interest at those strike points, those options will act like a magnet, and that might mute the action for that day. But on the Monday, then it can actually move away from those prices because those options are off the board worthless.
Great information there, Dennis. 8:59. Spencer's going to wrap up the week, the show, and tell us what we got to look forward to next week.
Yeah, we got some good ones next week for you. Paul Uke, he's maybe our best biotech guest. Haven't had Paul on in a few months, and he is really an expert in the biotech space, and will be good to talk to as we head up to this election. One of the more volatile sectors. Also, Phil Davis will join us from Phil's Stock World. Oh, he makes great picks. Always love having Phil on the show, as well as Tommy, Nick, and Scott Rather will join us as well. Maybe we'll get a few more in there before time comes. If you missed any part of our show today, either on our website or on YouTube Live, you can catch our podcast. We're on iTunes, SoundCloud, and Stitcher. Just search for Benzinga or Premarket. Also, check out Benzinga Pro. You can get a free 2-week trial. Just go to pro.benzinga.com. You can also call us at 313-960-2000 if you're interested in getting a demo or a trial, and mention the fact that you're a Premarket Prep listener, and there is a discount for you. Last thing, please always remember that all the information, material, and content from our show is for informational purposes only and not meant to be investing advice. Just about 3 weeks away now from Joel and Dennis's 2-day trader workshop here in Detroit. The link is in our chat, and you can just Google Benzinga 2-day trader workshop. There are only a few seats left, so don't forget to sign up if you're interested. And to answer your question in the chat, RD, that guy's name was Peter Ghosteen. He was a trader. He's the founder of 61.8. That's spelled out 61POINT and then the number 8 .com. You can check him out there. And that's it for us for the week. So thanks for sticking with us, and I hope everyone has a good weekend, and I hope you're back with us again on Monday.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.